everyone, and welcome to the Hash. Oh, that was a great opening. Let's start that again. Welcome to the Hash, everyone, where we give you the latest and greatest in crypto and culture. My name is Naomi Brockwell. We have our other wonderful hosts. We have Ben Powers, Jen Sanasie, Will Foxley, and Zack Seward. And we're kicking off the day by talking about some big news to do with WeWork. So, Will, what have we got there?
Yeah, shout out to your shirt. It's a great one. And also, we got some jean jacket action going on, so appreciate it.
Thanks for the mention. I appreciate that.
I did not run to my closet 30 seconds before this show to put it on.
False. Fake news. WeWork is accepting crypto for payments, just kind of adding to that whole narrative of larger companies putting crypto on their balance sheets. They intend to hold the crypto that they are paid with, and Coinbase is going to be the first company to do so. So like I was saying a second ago, yes, we have another company and more of a millennial late stage or newer company kind of getting into the crypto scene. So you have like Tesla doing that. That's a newer company, electric vehicles. WeWork, you can go work wherever in the world and just kind of pull up, sit down with your laptop. Very new kind of business model, and they're accepting crypto as well. So interesting to see like these newer companies accept it as opposed to some of the older companies that have been around for a while, just kind of adding this to their books. But I want to give it immediately over to Naomi for your take on WeWork adding crypto.
Well, I think it's awesome that more people are accepting crypto, obviously, but I want to take it back. Like, wasn't WeWork like on the verge of bankruptcy recently, especially through 2020? There were all these talks about it going under and being this house of cards and over leveraged and all of this stuff. And it's kind of interesting now they're going into the cryptocurrency play there. And it's cool that Coinbase is their first customer to pay in crypto. That makes a lot of sense. And I wonder if they were the reason that WeWork decided to go this route, whether Coinbase was like, hey, we want to pay you. And then they were like, all right, so we'll accept that from a lot of people. But we'll see if it helps their balance sheets at all. How is WeWork doing these days? Jen,
well,
you
our
got your
shared
hand
office
up.
space is even a thing. Like, we're in a global pandemic. We're not supposed to really be in shared spaces, supposed to be 6 feet away from each other. And so this is interesting to me because I was reading that WeWork is projecting revenue growth and they're planning on going public via SPAC. Like this, I don't know. I don't know how to feel about this.
Well, there has to be revenue growth. It can only go up from here, right?
Yeah, I think it's not often you see a traditional company come into the crypto space and potentially make it look worse. I think WeWork is one of those companies because, simultaneously while we're talking about this, there's a Hulu documentary that's come out talking about kind of the cultish movement, like shell company aspect of WeWork generally. And so honestly, I couldn't really care less that WeWork's doing this. I don't even know if it is like a boon for crypto in any way. I feel like there's just a lot of background there and they're dragging this baggage into our space, and I'm just going to say no thank you.
You are on fire today, man. You're so angry about this.
What did WeWork do to you? What did they ever do to you?
What did it not do? I think that's maybe the better question. Like,
you didn't like the beer on tap and the cold brew coffee and the
I think they just over leveraged themselves so hard. That's what they did, like, and they were like losing tons of money, like they were defaulting on their rents and stuff. So there's a whole lot to unpack here, but I think maybe that's, just my thoughts on the matter.
Well, I mean, it's a good idea. Sorry, go ahead, Zack.
No, I was just going to say, it should be noted, CoinDesk, a former WeWork tenant, no longer, but yeah, the Manhattan Tower 49, I think it was where we were for a number of years. I did want to say sorry about that, dude. I just did want to say, like, I do want to say that this is another hack at the payments use case for cryptocurrency and for Bitcoin specifically. So I think, the fact that this is another big company that's trying this, as Will sort of alluded to in the open, is maybe the news here, right? Here's another big company that's trying to make this crypto payments thing work. I'm not sure which cryptos they're accepting. I don't know if we went over that, but I would be curious to see if this is one where they find people who are eager to use it as a payments vehicle. But sorry to interrupt, Naomi. I'll toss it to you now.
Well, actually, you answered my question. I was going to say, has anyone used WeWork here? So I have before. I think they provide a great service, especially when more and more people are working decentralized. And this was pre-pandemic, and more people are looking to shared office spaces and things like that. So I think it's a great idea. I have reservations about the company, as Ben mentioned and kind of ranted about for a little while there in great form. But I will disagree with you, Ben, on the crypto side of it. I think it's great. Anyone who's getting involved with cryptocurrency, that's great, because we are casting off the shackles of the existing financial system. If they're accepting Bitcoin or other cryptocurrencies, I think that is a step in the right direction and our decentralized future. So yay to them.
Yeah, Ben, you kind of brought up an interesting point, which was WeWork saga last year, where it seemed, I think that the CEO's name was Adam Newman or something like that. And he just kept going through all these trials and hurdles, and the company was just kind of being dragged through the mud alongside with him. And interestingly, if you look at like how they were able to kind of go through that, through those hurdles, it was because they were getting so much money from the Bank of Japan, which itself has just been leveraging quantitative easing for years, just printing money and then handing it out to different companies and trying to earn some sort of profit in a world where you can't earn a yield with your traditional bank account. So it's kind of like a full circle. You have crypto payments, specifically Bitcoin, is trying to take a knock at the central banks. And now you have WeWork, which has kind of been boosted along by central banks throughout the years, is now taking Bitcoin for payment for its business. So it's kind of a full circle there, in my opinion.
I'm also curious about this too. Like, would it make sense to pay rent in a various cryptocurrency? Like we said, we don't know exactly which ones, but like it's going to be a taxable event every time. Does it even make sense to be doing this unless maybe you're Coinbase with your huge valuation?
I think they're accepting Bitcoin, Ether, USDC, and one more that I can't remember.
Texas.
Another great stablecoin product. Yep.
I will add to that, Ben. I think that it does make sense because actually it's a great way for a company to dollar cost average into the crypto space because they're getting the same amount in dollar values every month and it's reliable and all of that. So, I know a lot of people who pay their rent in crypto. I'd like to see a lot of more people do that. You're right. The taxes come into play. And I hope that we can figure those out and change those laws. That is my hope. But let's change track here. Zach, what have we got?
Let's change track to the world of mergers and acquisitions. Our colleague Ian Allison reported yesterday that BitGo, the crypto custodian, is likely to be bought by Galaxy Digital. Now, this is another crypto custody acquisition that is reportedly in the works and would be a big deal. The sums that we had heard from sources were quite large. This would be another major acquisition in the space if indeed it is confirmed as true. I'm going to toss this to Will. Why do we keep seeing all these crypto custodians get bought up? PayPal bought Curve, Fireblocks has been invested in heavily by the likes of BNY Mellon and other big institutions. Why is crypto custody a key part of this strategy?
Yeah, great question. I think that in these bull markets, you might think that the big companies, the sexy ones, the interesting ones are the ones that matter and you're going to try to gobble up, but that's not the case. Like, you want the infrastructure, you want the ability to process these payments, and companies like PayPal previously didn't have the ability to process cryptocurrency in a way that's safe, reliable, and up to the standards that they have internally beforehand. So what do? You go out and buy a company that's been working on this specifically for years, and then you bring them into your company, you take their assets, whether it's their people or their tech itself or software they're developing, whatever it is, and you put that into your project itself. And then a few months later, you can spit out a project like Venmo, where you can buy and sell crypto natively on your own application without having to do that internally, which some of these larger companies, it's really, really tough to kind of spin up your own side project inside just a project. A company gets too big and they can't do this. And so it's very common just to see these companies go out and gobble up smaller players. So I think we're going to keep seeing that. I'm not familiar enough to say who's next. Maybe you can shed some light on that. But very interesting to see Galaxy Digital doing this. if you go back through the headlines last year, they were really hurting in March and April of 2020 with the onset of COVID. Their stock dipped. A lot of their products were kind of flubbing. A calendar year later, they're offering huge sums of money to a company that PayPal wasn't even able to secure. So interesting to see that 180 for Galaxy Digital, which also has a lot of other products coming to market. They have ETFs in Canada. They're trying to get an ETF in the US. They have some mining facilities going on right now as well, and some other financial products just for the cryptocurrency space itself. So I think that's a project to watch for sure.
Yeah, really a remarkable turnaround by Galaxy. They're also preparing, they're listed in Canada, but they're also preparing reportedly for a public listing on US markets as well. BitGo, I think you mentioned it, they had been reported as sort of being in talks with PayPal, and that deal wasn't able to get done. So if this does indeed come to pass, this will be a very interesting landing pad for BitGo, which also among its products provides wrapped Bitcoin, which is a big concern in terms of getting Bitcoin into the Ethereum ecosystem and letting it play in DeFi. Naomi, I'll throw this to you. I think I saw your hand go up. What's your take on some of this latest acquisition news?
I mean, I'm just interested, like you mentioned, PayPal vying for BitGo, and I think they offered as much as $750 million for the custody company. And so the fact that they weren't able to get them, and now Novogratz is in talks, and Galaxy is in talks with BitGo, is very interesting to me. There are also some other things on the horizon for BitGo. So it is one of the custodians under consideration for a Goldman Sachs wealth fund. So the idea of that is that they would offer Bitcoin to high net worth investors. So there are some interesting things that BitGo is playing with right now. It seems that they are the popular kid in school right now, and everyone's trying to get them. I'm interested to see how these talks are going to turn out.
Yeah, I mean, separately, we reported this morning that they've upped their insurance cover to something like $700 million for clients who want that additional comfort of making sure that their assets are insured to that level. So yeah, a lot going on with BitGo, a lot going on with Galaxy. This is definitely a deal to be watching. Ben, did you have a thought here?
No, I think just makes a lot of sense. I think they're rounding out kind of their suite of services. Will, you hit on all the different areas that they're involved in. And I'm curious to see which firms, continue down this line. Again, I don't know enough to necessarily kind of point to who might be next, but just these entities that are starting to offer more holistic services really playing in the crypto space like this.
Sounds good. Well, thanks for hashing it out with me. We're going to take a quick break, and when we come back, we're going to talk about some stuff, including a South Korea crypto crackdown, a big funding round led by A16Z, and the world of luxury and blockchain. Stick with us on The Hash, and we hope you're having a great day. Thanks so much.
Welcome back to The Hash, everyone. We are talking about all the latest and greatest in crypto, and I'm going to start off this block by talking about what's going on in South Korea. So they're apparently really cracking down on illicit crypto activities at the moment. What that means, I'm not sure. I mean, there have been some previous rulings in South Korea. They implemented a law earlier this year that basically would prop up incumbents and larger money transmitters, essentially. to the detriment of smaller players. But they've just announced that from the Office of Government Policy Coordination that authorities are now targeting all illegal activity involving virtual assets during a special enforcement period from April to June. And so it's kind of interesting what's going on there. I think it's a big turnaround from where people thought South Korea was going to go. There were high hopes that they would become this crypto hub. They had the great internet for it. You can buy crypto, you know, at every phone booth in South Korea. It's like built into the machine. So it's, you know, I think a lot of people expected that this would become a place people would gravitate towards. And instead, the opposite is kind of happening. You have exchanges leaving and shutting down, and then now you have this big crackdown. So I'm going to throw this to the group for your thoughts about what's going on there. Ben, I'll throw it to you. What do you think? Will, I saw your hand up, so I'm going to switch. Ben, you don't get it yet, but Will, you do.
Ben. Too bad for you. No, I think it's interesting when you're looking at like the larger picture and the history of South Korea. Just like you're saying, South Korea historically has been very advanced technologically, and since the internet age kind of sprung up, and crypto has been no exception there. They've been kind of leading the way with a lot of big exchanges located in South Korea. But they've also had some really backwards laws, which has led to some interesting price action over the years. So the kimchi premium being one of those kind of weird spectacles of the cryptocurrency trading world, where South Korea is so blocked off from the rest of the world that you see a price premium for Bitcoin during bull runs, where even on the spread between Coinbase and South Korean exchanges can get to over a few $100s. And traders have notoriously used that to, they fly into South Korea, they buy crypto, or they fly in and sell crypto, and they kind of pick up the spread there. So interesting to see that they're kind of doubling down, adding more enforcement. I think it is good to kind of take a look back, or a step back, sorry, and say, like, how far will this enforcement go? We don't quite know yet. And if we look at the United States, where enforcement has been notoriously slow, there might be similar repercussions in South Korea, where it's just very, very slow, and there might not be a lot of enforcement right away. It could take years for something to develop, but overall, I think it's a negative for the space.
Yeah, Jen, I saw your hand go up.
Yeah, just a question for you, Naomi. Did the report say what kind of illicit crypto criminal activity is happening in South Korea? Or are they just looking into crime?
Yeah, so they're looking into a bunch of different things. They're looking at pyramid schemes. They're actually also looking at what Will just mentioned, this kimchi premium. So the Ministry of Economy and Finance and the Financial Supervisory Service, they're currently working to determine whether this arbitrage that's happening is actually in violation of the country's foreign exchange laws. And to me, that just seems like they're targeting efficient markets working. I don't quite understand why they would want to crack down on that, but
they created
it's very interesting. Yeah, I mean, it's like, it's kind of crazy what's going on there. And last month you had the governor of the Bank of Korea said in a parliamentary hearing that that Bitcoin has no intrinsic value, and he doesn't understand why the value is so high. So, although we have these high hopes for this country that is so technologically advanced, has such a high-speed internet, really had the makings of being a crypto hub, it seems that maybe they just don't get it. And so they're just regulating it out of existence and missing a really great opportunity. I went to a conference there about 3 years ago, and the energy was so high. It was really exciting. Like, you go to the Bitcoin Center there, you chat to the people. Everyone is so excited about the future. And that future turned into this giant regulatory crackdown and exchanges closing shop there, and it being really hard for crypto to function. So it's super sad to see. But Zack, any final thoughts on all this?
I love Korean cuisine, so whenever I hear the kimchi premium,
Me
I
too.
get really hungry, and that's all I have to add.
Let's change
my
track.
immediate thoughts were like,
Ben.
my immediate thoughts were like, were they not doing this already? Like, were you not looking at illicit activity generally? And it really is kind of disappointing, given the fact that, there was such high hopes like 3 and 4 years ago for kind of Korea as a hub for crypto. And I think it's also instructive, like, look at how this is happening in certain countries where there was previously high hope and seemed to be ahead of the curve in some ways. And they might be instructive for where other countries who are lagging could be in 3 years' time or so. So that's maybe the way I'm thinking about this.
Yeah, I completely agree. But let's go to the next topic, Ben. What have we got there?
Yeah, so yesterday, Andreessen Horowitz led a funding round for the privacy startup Aleo to the tune of $28 million. Now, that is a very large amount, particularly when you take into perspective the kind of ideas around privacy tech being bad for business in some sort of ways. And this seems to be, this round in particular, sort of a bet that privacy is going to have a bigger market in the future. And so what Aleo's doing, and I think is really interesting, is they're basically developing a platform for developers to work on web apps and be able to leverage zero-knowledge proofs, which are cryptographic techniques that help make data more private, because you don't need to share the actual data. This proof will tell you whether it is legitimate or not, and it can be used to verify all sorts of things. So I thought this was really cool because there's been a lot of work around cryptography and around privacy and around security that's come out of the world and the booming world of cryptocurrencies that we're now seeing spill over into other areas where they can benefit people, and not just cryptocurrencies, but people more generally. So that was sort of my takeaway here. But Naomi, I'm curious about your thoughts on this one to start.
Yeah, I think it's awesome. I think that we're going to see more and more of these privacy specialists importing their knowledge onto other products. So, developers could port their apps onto Aleo's platform. Then they immediately get access to leveraging these zero-knowledge proofs, or they can build their apps from the ground up right on the platform. And people don't need to be encryption experts in order to do this. They're outsourcing this to Aleo. So that's super awesome. I want to see more of that stuff. I want to, privacy should be a priority for people. And the fact that it's not, it's because it's really difficult and it requires a lot of specialized knowledge to understand it and to implement it correctly. And there's no point in doing something half-heartedly. And then actually, that could be more dangerous than having no privacy controls at all, right? If you're a company that starts spouting that you're doing all this privacy stuff, but you don't really know what you're doing, then you're giving people this false sense of security when they use your platform. And so I think a lot of people just shy away from that stuff altogether. So the fact that Aleo is providing this service, I think is super cool. But Will, what's your take on all this?
It's interesting to see that A16Z just got this huge payout from Coinbase, and they're immediately putting back into the cryptocurrency scene itself. And that's what a lot of these people were promising beforehand and afterwards, saying like, we're going to see a rejuvenation of funding, and we're going to see more money flow into the space because of the Coinbase listing. And so I'm just expecting that to keep on happening as more of these companies go public. We keep seeing richer and more textured investments, getting into things that are kind of, you wouldn't invest in this off the ground, right? You'd want to invest in something like a project itself that kind of has like a wide swath of opportunities. But here it's just about privacy, which is a very focused case. And so that's a boon for the industry itself, that we kind of see like this trickle back effect. But I'll give it down to Jen.
I just want to take a step back and talk about zero knowledge proofs. And maybe, Ben, you can give us a real world example where this would benefit a mass audience.
Yeah, so I'm going to have to be really general here. Like cryptography generally, and Will, you know this struggle. It is really complicated. It involves a lot of math. But the idea here is that, web apps, which kind of run in the background of the internet and do a lot of functionality for us, like payment portals or like verifying your password is accurate. Zero knowledge proofs can plug in there and help in a variety of different ways. So for example, if I wanted to plug my password into something, the kind of web app would say, okay, usually like give me your password. But with this, you could input a password, but they wouldn't show the password to the web app itself. It would just get a proof that says, yes, this is a verified password, and you can allow this person access to it or to whatever they're trying to get into, but they wouldn't hold that, for example, on a centralized server. That would stay locally on your device. And what I think is interesting here is the ways that Aleo's also pitching this to companies in some ways. They're saying, because we think about this in companies like using data as a resource, as like an add value, and extracting data is really important to them. But here in conversations with Howard Wu, the CEO of Aleo, he was saying, look, if you're a company, this is going to be helpful in terms of your liability because we're seeing governments kind of crack down on access to data and other things and privacy generally. And they're also saying, look, if you have like a data breach, for example, because we're seeing more and more of those, and I don't see them stopping or slowing anytime soon, attackers aren't going to get access to personally identifiable information that could be spread across other use cases. So I think that's a really important point and a sort of use case that needs to be articulated more when we're looking at privacy, because we're showing, not just is it of use to an individual, like it's also of use to business. And that's going to be what adds more funding, Will, as you mentioned, to these sorts of companies.
And I think it's really helping usher in this decentralized world, right? You know, Ben, you talked about this data staying on each individual's device rather than being pushed to the centralized server or the centralized company that's keeping this treasure trove of information. I think the more that we can push companies in this direction, it's in their best interest because, as you said, they don't have the liability of having to protect that data and then getting in trouble from the government or from its users if it gets breached. You know, it helps them, but it also helps users because users are protected, their data is protected. And I think it just creates a safer world without that information flowing out there. So excellent stuff. I'd like to see more of this. Thank you.
Okay, well, Jen, we're going to pivot to you. What you got for us today?
All right. So we have a new blockchain consortium, LVMH, which is Louis Vuitton's parent company. Prada Group and Richemont have joined forces, unveiling the Aura Blockchain Consortium, a nonprofit that's going to promote the use of a single blockchain for luxury brands. So this is exciting. This is a conversation I haven't heard in the media for a little while, but I know a few years ago we were talking about blockchain as a technology to be able to track goods and items back to their origins. And so here we go again. The luxury goods brands have come to fruition with their consortium, and we're going to be able to prove that our Louis Vuitton bags are real. So I'm going to kick this. Who looks like a luxury brand supporter on this panel? Ben.
Oh, I raised my hand for the wrong thing there. I was going to say, no, absolutely. In service to the people, flannel. Right? This is what we're all asking for. Exactly. I chop my own wood. I hunt my own deer.
It's Louis Vuitton flannel. Thank you.
Yeah, check out this jacket. So
I think,
really, Jen?
I think it was just...
I know, it's true. I'm so
Will
sorry,
Will. No, I thought this was interesting because when we're thinking about like the unsexy uses of blockchain, this was a use case that was really touted like 3 and 4 years ago when it was just starting to enter the mainstream, right? Like
everyone
the sort of supply chain, like, yeah, and like proof of legitimacy of certain things and stuff like that. So I think it's I don't know what kind of lagging indicator this may be, to borrow from Zack, but in this sense, I just don't really know why we're kind of circling back around to this. Maybe it's just because you have like brands with tons of money invested in their merchandise and their kind of marketing, and their value comes from just being a scarce and legitimate resource. Maybe that's why they're investing in this. But it seems to kind of be a rehashing of things that have been tried before in the past and didn't necessarily gain a ton of traction. But Will, I want to toss this to you to get your thoughts here.
And because you're wearing such a great jacket.
In the first place.
Fashion
exactly. Look at that jacket.
Look at that designer outfit.
Icon.
Our colors match today.
Okay, well, I just think it's important to realize how silly this whole idea is for any sort of tracking system with a blockchain. Just doesn't make sense at all. Like, I think people on the surface say, hey, you can't tamper with the blockchain, and it's a ledger. You can put that information there. It doesn't make sense with how blockchains work, because there's a lot more to a blockchain than necessarily just keeping track of information blindly. Like, they could do the same kind of thing with a Google Sheet, and I don't understand what the difference would be, especially if this is like a private blockchain where only a few people have access to it. It'd be cool to be able to track your bag from one end of the cycle to the other, or over the years. But there's different ways of doing that don't involve a blockchain. So to me, this is just like the Long Island blockchain company all over again, where, hey, what's getting the news?
I guess they're trying to kind of tackle the authenticity issue in the luxury brands market. And I was thinking, do you think this could be better done rather than with a Google Sheet, Will, with an NFT?
Oh man,
I don't know how that would change anything, because you have two objects, right? You have one in the physical world and you have one in the digital world. And the issue is in the physical world. It's not the digital world. The physical world, you can fake things and you can make things appear as if they're not. And there's no way for you to really keep that bridge between the two always alive. If there was some sort of way where you could like weave into the fabric, like the metaverse, and I don't think we have that tech quite yet, then maybe you could create a system where you have a bag that can be tracked from the beginning of its life cycle to the end. But I think it's always going to be like an issue in the meat space where you have someone is willing to fake your handbag or fake your money or fake your watch. And I don't see how a blockchain application can necessarily change that too much, just because there's that connection again. It's just hard to keep alive.
Yeah, I have to agree with Will there. Unless you're able to create a hash of the bag to prove whether or not it's authentic, I just don't see how the blockchain really helps, because it's so disconnected. It's the same issue I actually have with NFTs. Most NFTs are not hashed, and then that metadata is put in the blockchain. Most of them could be replaced, and you would never even know it wasn't the same NFT. The CryptoPunks, the early ones, did make them non-fungible tokens. They did make them unique by creating a hash of the actual image and putting that metadata in the blockchain. Most NFTs don't do that. So I think that this would be the same issue in this world. There's no way of proving that this actual thing is unique, or in this case is actually Louis Vuitton and is not a ripoff. So I think, in the early days, I think that there was all of this talk about chain of custody and how to figure out this problem. Maybe they will figure it out, you'd have to have, it wouldn't, I don't think that blockchain would be this panacea, right? I don't think it's going to be this solution, this silver bullet to save this. It's going to require a lot of really complicated structures in place to actually create products that you can prove are real. But Zack, I saw your hand go up.
Yeah, I just think it's a interesting sort of historical moment, because this project has been a long time coming. We first reported on this stuff being developed in partnership with Consensus way back in March 2019. The funny thing here is that as this is debuting into a market that is more and more about cryptocurrencies, it's more about we're sort of now in the Bitcoin not blockchain moment. And when this was initially conceived, we were in the blockchain not Bitcoin moment. So that, these companies were asked by Bloomberg, okay, cool, are you going to accept crypto for payments now too? And they're like, no, we're not doing that. That's not what this is about. So just that sort of evolution in time, in terms of the amount of time it took to get this done, and how far the conversation has come in those intervening 2 years was quite interesting to me on this one.
New is old and old is new, and time is a flat circle yet again.
True. All right, well, it's time to wrap it up, folks. So we are going to end this episode of The Hash. It's Wednesday. It's April 21st. It was really fun talking with you guys. I think you're super smart, cool. I really like your jean jacket. Will, your zip up is looking sweet. Flannel, we got the whole thing going here. Jen with the necklace, this is lovely.
I was going to say, Zack, do you not like my outfit?
Come for the fashion, stay for the news,
That's what I'm saying. Yeah, you think you're watching a news program, but really you're watching 5 fashion icons discuss it in real time. So we'll be back tomorrow to do it again. And until then, stick with us on CoinDesk and CoinDesk TV. And we hope you have a good day. All right, everybody.
See you fashionistas later.